Welcome to the Fund Your Retirement podcast.
But yeah, I mean, what I'm really looking for is, companies that have got huge potential. And Arizona Lithium is interesting because at the time it was called Hawkstone. And not only did the shares shoot up in price, but you also got some free shares in a company called Diablo if you invested when I told people about it. So not only have you got the uplift from 4.3 or whatever you got in at to now, but you've got some free shares in another company as well. So
win-win.
Happy days.
Hello, everybody, and welcome back to the Fund Your Retirement podcast. Simon Popple is back with us for part 2 on introducing investors to commodities so they can diversify their portfolio and retire earlier. Part 1 was an introduction on why Simon specialises in the commodity space and why Simon believes every investor should have a percentage of their portfolio invested in commodities. Because 1, you can't print them, and 2, they're used to make things. And in this episode, we will take a deep dive into the system and the strategy that Simon uses in the commodity mining space for unearthing gems like Chalace that went up 65 times. Simon will share how he picks the winners in the junior mining space so you can diversify your portfolio and fund your long-term retirement. Hello, Simon. Thank you for joining us once again.
Hello there.
Yeah. Thank you for coming back and agreeing to part 2.
No, well, it's great to be here, and I think very interesting times for the junior miners. So if some of your listeners want to get involved, the timing is pretty good.
Well, it is, isn't it? Because we've just been discussing earlier about Arizona Lithium, which we will get into, but you've got another one as well that's doing extremely well. So it'll be good to break that down a little bit in the conversation. But first of all, I just want to start from a 30,000 foot view. So let's start from the top, how Simon views the space, and let's drill it down to how you end up selecting these companies like Chalace and Arizona Lithium, which we'll discuss earlier. So I presume you don't just Google mining companies. I'm sure you don't just sit down and Google on the computer and type in junior miners. But where do you source the list from? Where do you get the list of junior miners?
Well, I've got 2 businesses really. One is I help companies raise capital, and the other is obviously the report.
Yeah.
And for both reasons, because the report brings them new investors, and obviously some are looking for new capital. I do quite a lot at various conferences. Excuse me, I've spoken at Money Week conferences. I do a lot at Minds and Money and various conferences around the world. And so that means that rather than me have to do the research, a lot of people approach me and say, what about our company? We want to talk to you, have a meeting with you. And I go onto the internet, I probably meet 25% of those who approach me. And then of those, I probably 20% I write up, because obviously speaking to them, sometimes you unearth something that worries you, other times you unearth something that excites you.
Yeah.
But it enables me to sort of filter a lot of companies. Some of them, yes, I've been in the industry for 20 years, so I do know a lot of companies, but there's always a few that come out of the woodwork. If I'm honest, Arizona Lithium was a great example.
Yeah.
Where you find out about it, you think, yeah, that's interesting, and you dig around and you write it up. So it's I certainly don't Google. I get approached. That's part of my value added, that people come to me, and because of what I've done in the past, and it just means that subscribers don't have to take an undue risk.
They're benefiting from your network, aren't they? Then within this area, the commodity junior mining space, they're benefiting from your time, experience, and the network that you've created. Is that a fair comment?
Yeah, absolutely. Look, it's taken me 15, 20 years to develop the network.
Yeah.
And also, we can go into how I look at companies as well, because I think that's important. It's in terms of what I do, it's not just coming up with the ideas. I spent most of yesterday on calls with investors who invested in Arizona, and they're like, shall I sell it? So, I've made 300%, 400%, whatever it is.
Yeah.
And there's a lot of psychology.
Of course.
It's much more difficult to make a decision if you're in profit.
Yeah.
If you're in a loss-making position, it's pretty easy. You don't sell.
You're just leaving it. Yeah.
If you're making money, you're like, oh, should I sell? What should I do? And so, yeah. There's some interesting, situations that people find themselves in.
Yeah. Okay. So you've got a group of companies that come to you with some ideas, suggestions, or they've got some mines that are about to come online. Do you then categorize them into different sort of groups? Say, for example, precious metals, the green energy transition, such as lithium and uranium, etc. Traditional energy, oil, gas, things like that. How do you then drill them down further after that?
Right. Well, first of all, I kind of look at what commodities I want to cover, because I want to have diversity. Not just, I look at different countries as well, but I really focus on Canada, Australia, and the US, because I don't want to, wake up in the middle of the night and find out there's been a coup somewhere. And I think those are sort of three of the safer jurisdictions to look for commodities. I like commodities because you can't print them, they're tangible. But yeah, you're absolutely right. What I'm looking to do is have a wide range of commodities. I've got a lot of gold and silver and PGMs, but I've also got lithium, uranium, copper, manganese. I've got a whole range of companies, and what I'm really looking to do is try and find. I break things down using a fantasy football format. So I've got goalkeepers, which are the largest companies in the world. Your Barracks and Win Precious Metals and people like that.
Yeah.
And I've got defenders, which are sort of still producing, but not as large. Midfielders are sort of new to production or about to go into production, and forwards are out and out explorers. So going back to your question, what I do is I look at the commodity to see if I think it's got a great future or not. I then try and get a balance. I don't want to have, too much high risk in, let's say, lithium. So I'll perhaps go for a high risk one and what I view as a low risk one. And also, I don't want them in the same country. So I'll perhaps go for one in the US, and with lithium, I've got one in Brazil.
Yeah,
but it's listed in Canada.
Yeah. Okay.
So there's quite a lot of thought that goes into it, not just in terms of the companies themselves, but also what the commodities are and where they're operating.
Yeah. Okay. I can see the amount of work that goes into this. So you've got the initial sort of outline of a potential organization or potential mine. What are the metrics that you look for to actually put that into your portfolio and then into the newsletter for your subscribers?
What I do is I use something which I call the bridge system, which it's an acronym for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. And I find this is a useful framework to use to look at any company. And whether it's lithium, copper, gold, silver, it just sort of cantering through it. I like to make sure that there's a decent, strong balance sheet. It's nice if they've already got some resources, and if they haven't, that there's either some resources near them, so there's a good chance that they'll get some, or that they've got a large exploration program up and running, and they're expected to get a good resource. Infrastructure is very important. You've got to have roads, power, water, rail.
A way of getting the commodity out.
Well, exactly. There's no point in having an amazing grade and then there's no roads for 200 miles and no power for 200 miles, because if there's no roads or power, you're going to have to pay for it. Yeah. And so I like companies that have got an existing infrastructure that they can leverage off. So quite often there is a cost to linking up to the power or upgrading some logging roads or something like that. But I don't want them to have to start from scratch in terms of infrastructure. Diversification is more about having a diversified portfolio of different commodities, different jurisdictions.
Yeah.
There's obviously an FX play as well. There's a lot of people with who've made money out of property, which, don't get me wrong, that's how I made my money initially. But the trouble is if you've got a property portfolio, chances are it's all in the UK, and so it's all in sterling. So you've got a massive exposure to sterling. So one of the things I like about this is you've got exposure to other, not just commodities, but also currencies.
Yeah, of course. So if we then take Chalace and Arizona Lithium as an example, how did you come across them? And then what stage were they at when you actually put them out to? Yeah, well, they were actually freebies that you give away, weren't they? You had them on your website for free, didn't you? So
that's right. Yeah,
it wasn't just that you actually give them to your subscribers; they were open for anybody to.
They were, yeah, and I mean, I'm actually going to have to change my favorite on my website because
which is
so well
Arizona.
So yeah, but yeah, I mean, just sort of, I don't know, let's canter through Chalace. I mean,
perfect.
The balance sheet at the time, Alex Dorsch, who's the CEO, he's ex-McKinsey, and I heard of him and thought, well, I had a few conversations with him and found out more about what Chalace are doing. But at the time, they had a market value of 41.3 million. Right. And 21.3 million in cash. So, that was
a good balance sheet.
Yeah, the balance sheet was pretty good, to put it mildly. Yeah. And they got some amazing assets. At the time, they had some assets in Canada as well, which they subsequently sold to Cisco. And then they got a tenement around the Fosterville mine, which is the highest grade mine in the world, right. And they got Julimar, and so you really had, let's call it, two lottery balls in the drum, and I flagged them to people, I think on my website at about 12.5 cents, and I told my subscribers at about 15.5 cents, and went to over $10. So some people made life-changing amounts of money.
Yeah. Crypto money. That's
exactly.
It's crypto sort of returns, isn't it?
Exactly. In Arizona, I like that as well. I told people about 4.3, closed in Aussie last night at about 18.5. It had gone up to 20.5. Wow. It's still going up. That one is, but as I say, I loved it at 4.3. I thought, wow, that's amazing value. But you've got to really believe in the lithium story to think it can go any higher. But yeah, I mean, what I'm really looking for is companies that have got huge potential. And Arizona Lithium is interesting because at the time it was called Hawkstone, and not only did the shares shoot up in price, but you also got some free shares in a company called Diablo if you invested when I told people about it. So not only have you got the uplift from 4.3 or whatever you got in at to now, but you've got some free shares in another company as well. So
win-win.
Happy days.
Yeah.
So, but yeah, and then they both. I mean, sorry, I'm hopping between the two, but
no, it's all right. It's fine. It's good. Yeah.
Arizona Lithium has only explored 4% of Big Sandy. Now,
Big Sandy
is a deposit in Arizona that they're looking to get lithium out of. Now, don't get me wrong, they would have chosen where to explore. So I'm not saying extrapolate what they've got from 4% up to 100%, because they've obviously picked areas that they think are particularly sort of high likelihood that they'll find some lithium. Yeah. But they've only got 4% of the land explored, and they've already got a decent resource. Yeah. And so if the lithium market does take off, big if, it could be very happy days.
Yeah. You think it's common knowledge, don't you? But the lithium is very much tied to the whole green energy transition, isn't it?
That's right. Yeah. It's very much tied to the electric vehicle market.
The electric vehicle market. Yeah.
If you think the EV market's going to take off, then having some lithium is probably no bad thing. But for example, in my portfolio, I've also got a zinc company, and in South Korea, the university recently found a battery that it's actually performs better a zinc battery performs better than a lithium battery. Now, I think lithium will probably win the day, but if it's zinc, I want to make sure I've got my bases covered there as well. And so listening to the climate change conference and stuff, it would appear that oil and coal are on the way out. So logically, there has to be a new coal and oil.
Yeah.
Now, we don't know what it's going to be, but I think if you've got a diversified portfolio, you've got more chance of finding it. And if you invest in a company which has got huge potential in its own right, and let's say lithium does turn out to be the new oil or new coal, whatever it is, the returns could be life-changing.
Well, if you just, part of the whole thing about fund retirement is sharing ideas and strategies of how people can achieve that. If you just share, would you mind sharing how your own portfolio has gone up since for the last year of being involved in these companies? 190,000 did it start off at?
It started off at, sorry, I've actually got the numbers somewhere. Yeah. It started off at, sorry about this. I want to make sure I give you the right number. It started off at 192,231, and largely because of Chalace, but not entirely because of Chalace. In less than 9 months, it was at 790,396. And then what I did is I converted my SIP to a SAS, invested in some other areas. So last September, I think my portfolio in my SAS, in my trading account, was about 425.
Yeah.
At Christmas, it was 450, and today it's about 497, 500-ish.
Yeah. And you've and out of that initial profit, am I right? Did I catch there that you took some out and reinvested in other assets that have the potential to further grow? Did I catch that right?
Yeah, basically what I did is when I converted my SIP to a SAS, I took a whole chunk of money, quite a lot, out of the trading account that started off at 425, because I wanted to invest in other areas.
Yeah.
And I view myself as, I don't really like risk, to be honest, but I like tangible stuff. And I know a lot of people don't like commodities, they view them risky, but I'd rather invest in something that's tangible rather than a piece of paper. So yeah, in terms of doing a like-for-like comparison, the 195 compares directly with the 790, and then the 425 I started off compares directly with 497 or whatever I'm at the moment. But yeah, that 497 is across, I think I've got 59 stocks or something in the portfolio.
Right, that many.
Of which Arizona Lithium is one. I've actually sold out of Chalace. Yeah. I like a diversified approach, but if you just need one like Arizona or Chalace amongst those 59, to give you some really stonking returns.
And they were the free ones as well on the website.
Yeah, I know.
Brilliant, isn't it?
For that, but what do you do? It's a sort of...
no, I think it's brilliant. I love it. Yeah, So anyone now visit brookfieldcapital.com, because the next one will be going up soon, I presume.
I'm going to put a new one on the website. I'm going to see what Arizona does in the next week or so, but if it continues growing like it is, I'm going to probably swap it out and put a new one in, because I went in at 4.3, and if it ends up being over 20, there, as I say, I still like it, but it doesn't have the sort of sexiness to it that it did at 4.3.
It's actually a good segue, that. So you've already sold out of Chalace. You are anticipating or thinking about selling out of Arizona Lithium. What metrics do you look for when you're looking to sign up to scale out or take profits, or do you take the whole position out? Do you scale out? What sort of things are you looking at?
To be honest, this is when it just becomes more of an asset management.
This is a dark art, this side of it, isn't it?
It is. Yeah, this is more of an asset management issue than necessarily looking at the company, because at Chalace, I actually sold out, I think it was around $3 or $4. And at that point, it was already half my portfolio. Yeah. And I've got some friends who stayed in, and one of them's name is Drive after me, because they've made so much money, and some of them are still in, or they sold out at $10 or whatever.
Yeah, I hope they've took some profits. Like that's one of the key things, isn't it?
This is it.
Take something out. You got to bank something.
They have. I actually had one client who phoned me up when Chalace was about 300-400% up, and he phoned up to say thank you. I've sold. I've never made this amount of money before, and I said, well, you haven't sold, have you? And he said, well, yes. You're not listening to me. I made 300-400 times my money, and I said, 300-400% of my money. Sorry, and I said, well, I want you to make 3,000% of your money on something like Chalace. And he's like, oh, but you can never get back in, because psychologically, once it's gone, it's exactly. Yeah. If you buy 13-14 cents and it goes up to 70 or 80, whatever it is, and by the time you've got your head around, okay, I'll buy back in at 70 or 80, it was at like 140, and he's one of the larger investors. He's a former lawyer, but he worked out he would have got over 4.8 million had he stuck in.
That's the worst thing you can do, working out what it would have been.
He said it. I'm in touch with all my subscribers, and not all, but probably about 80% of them. And he wants to go out for lunch, but he flew to Australia yesterday. But he's in Arizona Lithium, so I think he's going to be buying.
He's happy, yeah. Oh, brilliant! It's good to have actually real life examples there as well of the clients' reactions and the subscribers' reactions and how they're dealing with it. Because it's one thing to when you're in profit and you've got that much on the table, it does become a psychological nightmare, doesn't it, of what to do. And I always say, just take some off the table, bank some profits, and it eases the psychological impact.
It's very difficult. I mean, I've got a similar problem with Arizona, where I want to take some money off the table. Funnily enough, I've got my own financial advisor, and I advise him on commodities, which is rather weird.
Yeah.
He was phoning me up. He's one of these people who was phoning me up saying, "What should I do?" And I was like, "Well," he came in later in the day. I think he's doubled his money, but I mean, I think it's nice to take some money off the table, but it's nice to have a bit of a run. That sometimes it's just best to get out and just bury your head in the sand. And if like Chalace went up to $10, I just tried to ignore it and but
stop looking at the portfolio.
Exactly. I mean, it's one of those things where when you get out, I like to get out over a period of time in case the shares continue to go up. But at some point, I just have to get out and
realize the profit.
Yeah, just realize the profit and don't be too greedy.
No, perfect. So as we come to the end of the this episode and part 2, what's the big takeaway that you'd like the listeners to get from the episode? What's the kind of the big thing that you'd like them to walk away with?
I think it's really diversity. You want to, whether you do something with me or whatever you do, I think you need to have a wide range of different investments. And I like commodities because they're used to make stuff. And I'm quite worried about inflation and things like that, which is why I'm particularly keen on this sector. But think about diversity. So think about different commodities, think about different countries, different currencies, because if you've made your money in property or whatever you've done, well done you if you have made a lot of money through something. It's also easy to lose money, and so if you look at Warren Buffett, he's made a lot of money through compounding. Yeah, and an interesting stat the other day, he made I think he's worth about 81 billion. But he's made,
give or take a couple of billion.
A couple of billion, but he's made most of his money since he was over 50.
Yeah.
And I think that a lot of people, they when they retire, they kind of take their eye off the ball and they say, "Oh, my financial advisor deals with that." And don't do that. I'm not saying don't let your financial advisor do it, but just keep an eye on them and question them and challenge them, because they need that.
Yeah. No, brilliant. Well, again, thank you very much for your time. And I think we should definitely have you back on if you'd be more than happy to come back and do a part 3.
Yeah, absolutely, absolutely.
Yeah.
And I'm, even though it would be nice if this third idea does take off,
Be brilliant.
I think my subscribers would like the idea of having one that they actually have to pay for, rather than get it for free. But anyway, celebrate.
Brilliant. Thank you very much. Take care.
Cheers, thank you.
Bye.